Zoom out a little bit for your viewing pleasure and tilt this a little bit. Sorry, this is so gutter-like at the moment, but hello, this is Ian and welcome to the Common Sense Collective. I talked to a lot of people about many things, but one of the things that I have interest in is the stock market. It's been like that for the last couple of years, and I've educated myself on many things that relate to the market. I still have a lot of research to do on more advanced charting techniques and the candlesticks, but a lot of basic things I have learned and I try to educate other people on, and I have a process that I learned from watching some penny style gurus as well as reading, and I'm going to explain this process with a stock that I actually played today, which my timing was off. Well, I can't say that my timing was off because the stock did shoot up at nearly 150% today, 156% actually, as you can see. But the stock was AMDA, which was Amadika Corporation. I'm not sure if they're biotech, but I really don't care. Also, as you can see, this is their price after hours. You know, when I bought into this stock, it was at maybe 211, and the stock I bought into the stock maybe around 10:15, 10:20 this morning. And as you can see, even after hours, it's moving, but the stock initially hit 270, and I broke one of my cardinal rules, which I just played the stock raw. I didn't go in with a plan, which is never a good idea. But I just played the stock raw, and I wanted to see how high it can go, which when you are not trading on fundamental analysis and good news, I believe this is a low float play, or they had some news, but it was nothing really that jumped out that would make this stock really shoot up the way that it did. And if we go to Big Charts, they do have some news articles. And this is from March 6th. This is the last headline they had. So they didn't have any really solid news that would cause them. Let's see. Wait. They provided an update on a clinical study. Let's look at this. It was up 181% today. And they are a biomaterial company. So they released clinical studies, information on a clinical study, and that is what caused their stock price to skyrocket. Apparently, it was good news. If we go to, so this is, I guess I should formally get things started. This is one of the websites that I use for charts, and this is bigcharts.com. Big Charts is free from MarketWatch, which is another website I'm on right now. But they offer free charting services and advanced charting services and pretty good information, and they do give you some news pieces. Another website that I use quite often is FinViz, which is financial visualizations. And if you look at them, bam, that AMD there it is right there, the stock I played earlier. Well, this stock gives you your top gainers, the new high, what's been overbought, and unusual volume, and it also gives you a breakdown of what exactly it means. A new high is pretty self-explanatory. Let's see, overbought, unusual volume, continue. Of course, yes, I understand. Thank you, Kaspersky, Russian safety. Get away, please. Okay, let's see, there it is. Now that all the pop-ups have gone, it'll give you a breakdown of exactly what overbought means. Stocks with an extreme price increase over the last 2 weeks. This is a top gainer based on news. And if you look at that quick and dirty chart, you'll see that it's been basically trending downward. Let's see if they can give us a little bit more news. This thing has so many damn pop-ups. Okay. Let's see what you should know about this company. They provided an update on the clinical study. That is the sole reason for the spike that you saw today, or that I tried to play today. So let's go back. Now let's go more into detail. This is over the last 5 days. This is May 3rd, and this is May 8th. So as you can see, the stock was right at, let's see, $1.64, and it's basically been trending downward. The moving average is going down, and then it hits today, and it opened at $1.06. Now, let's see, you see where the spike is, and I'm going to try to get onto an intraday chart. So if you want to do that, if you go to join Market Watch, which I'll do it on Big Charts, since Big Charts is free and you don't have to register, go to bigcharts.com, enter in the ticker name, 1 year, enter in well, go to an advanced chart, that'll be easiest. You can go here, time frame. Change your time frame to 1 day. And change it to 5-minute intervals will give you a good breakdown. I'm not going to put any indicators in because that's a more advanced video, and I need to do a more advanced study on indicators. So we'll go to chart style, change it from line charts to a candlestick. Background's fine, and we're going to change it from medium to big. Let's draw the chart. Now, as you can see, they still don't give us times on this, which I'm not a big fan of. I like times. Let's see if I can get times on Market Watch. Well, no, I'm going to stick with big charts because I said I was going to. So let's see. This is market close. I'm going to go to, well, you can see, but I'm going to go somewhere where hopefully they give us times, because times is going to be a lot easier for you to see the exact action, what's going on. So simple moving average, earnings, none of that stuff. We're using candlesticks. This is a day chart. The frequency here, you're in the 1 day range, and we're gonna always use candlesticks because candlestick charts and candlestick charting is basically a damn near an ancient art that can teach you a lot about the patterns the stocks will move in. So let's increase the frequency to 10 minutes on a day, so to kind of blow the chart up. Okay. As you can see, I started playing this stock about right here. See? And if you look, that's right at about 225, somewhere along those lines. And it spiked up to right here. So when I bought in right there, or maybe about right there, that was at 1020. 40 minutes later, it was right at around 270, 280, and I was being greedy. So I held. It's like, well, I'm already up about 33, 34 cents on the share. That's good gain. No, actually, I bought in the 217s. I apologize. Maybe 211, 212. When it went up to 240, I was up about 30 cents. So I was like, hey, I'm going to keep playing this, because you don't know what could happen. Well, it shot up to about 270, 278. And I was like, hey, I made damn near 60 cents on the share. So that's pretty damn good. 210 to 270, that's a really good return. And I didn't have a lot of shares because I was playing it cheap. And my account's relatively small. So instead of taking my profits here, it dipped back to around 241, which dropped my gains back to about 30 cents a share. And then I got horizontal price action and went down to the 220s. 218 kind of got me bothered. Spiked up again about 2 o'clock. Okay. Well, at that point, I'd already sold out. When it hit 240 over here, about 11:45, I'd sold out. I got out because you cannot predict what's going to happen with these. Now, had I done a little bit more research and had I looked, I was playing the, I didn't define resistance and support clearly, but I did see that there was a place for the stock to keep skyrocketing, which we're going to see in a second. But I just watched the stock all throughout the day, and it continued to give me half horizontal price action. And then around 3 o'clock, it happens. Right there, that tick. I wish this gave an exact number. That's kind of annoying that it doesn't. I thought it used to do that. See if I can get that. That's strange. But either way, right at around 214, 215, I thought, okay, the stock was done. It's over. And then, as you can see, this is volume. I hadn't said that yet. These little small blocks represent the volume of the stock. And what volume is how many shares of the stock are moving. So as you can see, whenever you get spikes in volume, that means more people are buying. And when more people buy, it usually drives the price up. Now, the volume here going down, which means that more people are selling. As you can see again here, the volume rose. So the price ticked up about maybe, let's see, from right at, what is that? Let's say that's 220. Let's say that's 222. Volume rose about 250, right? Volume spiked. People started selling again. It went back down. 214 maybe. Here, volume is increasing again, steadily increasing. Now, the stock finished on the day at 313. So had I stayed in the stock from, when was it, about 10:15, 10:20 this morning, I would have made $1 on each share, which is pretty damn good on a stock that went from 210 to 310. But I guess the biggest point I'm trying to make is there's money that can be made on these stocks. It's just utilizing certain processes. And I don't think I was clear about this. One of the first things I do when I'm looking for stocks to see what was the hot stocks for the day is I click down the pop-ups to keep popping up, and I go to FinViz. FinViz is a free stock screener. There are options. It's a free stock service, but there's also a stock screener, which whenever you learn your technical indicators, you can go in and set, I'm going to trade, I'm doing day trading, so I'm going to use the technical breakdowns, and you can type in, any type of information you want, like performance. If I want to type in stocks if I only want stocks that are up at least 15% today, it clicked out a lot of stocks. So if we go back, there are 7,419 stocks it found in its initial search it played today. If I click up stocks with 15%, that goes from 7,419 to 28. Okay, let's add something else. How many stocks are trading 10 or more percent higher, 10 or more percent above, let's see, more below high? That's odd. That's strange. Man, that's a high or low. That's probably why. Let's see. Stocks that were plus 15% today. The change. We got the change. Same thing. Let's see. Stocks that changed at least 20% from the opening numbers. It went down to 9. And of course, right there, AMD, the stock that we played, fell into these two categories. So the thing about it is there are a lot of filters on here that can help you find exactly what you want for stocks. There's descriptive trading, and I'm sorry, not descriptive filters and technical filters, whatever you want. They are all filters, average volume, current volume. Like that's one of the things that I really look for with stocks is you want a stock that is going to be up at least 15 to 20% because you want it to be able to make more money. Because if it's running like that, chances are people are going to be paying attention to it and doing the exact same searches that you were doing. So with that in mind, I like stocks that have over a couple 100,000 shares in volume, because that means that, I have a very small account, so I can't buy enough shares to really influence the price. But what it tells me is that this stock is in play. So the greater the volume, the greater the chance you have for the stock rising in value because more and more people want to get in. So let's say stocks that have over 500,000 units moving. Yet again, this stock is in play. That said, this stock was in play as well. This page gets really funky when it wants to. This stock was in play as well. And I don't know if this was news, but this one's not as sketchy. This is just a complete breakout, and it's kind of insane. This stock went from $3 from about maybe $2.80 to a high of $4.47 and a low of $3.50, and the highest it ever went was above $5. So you're talking about over at one point, this stock was up over $2.10 on the day. It didn't finish there, but at one point it was. That's what this line means. So this website is a great resource because using these filters, you can find stocks that are in place, and you can find stocks that meet your criteria. With all these different filters, you can break down the exact the exact stocks you want to trade based on your account size and the risk that you have to take. And so it's a very, very good resource. There are other options out there, but FinViz is one of the more popular options, and it is free. So if you want to get into the market and you want to get very basic research, FinViz is a great site to check out. Also, MarketWatch is another very good site. It is free. You just log in with your information, and you can plug in your tickers. You can get basic charting for free, and you can get information for free. You can get the top headlines, the most important headlines for the companies. So it's a lot that you can do with these websites. It's very good information. I'm actually not logged in right now, so with all of this stuff, this is without me even being logged in. So I just wanted to make this quick video, and the three things I want you to take from this video are: 1, whenever you trade stock, volume matters, because without volume, you cannot move in and out of the stock freely. 2, do not trade a stock without an exit plan. I did this today. I still made 30 cents per share, which if I had an account of $10,000, that could have been a material gains. But do not get greedy. Have an exit strategy. And rule number 3 is always do your research. There's a incoming phone call, so I have to take that. So thank you all for listening, and I'll be back to get with you all shortly. Stay hungry.